Did you know that currency market is the largest financial market in the world and way larger than equity markets? Yes, according to the 2019 Triennial Central Bank Survey, the daily transaction volume in a forex market is up to $6.6 trillion. So, if the transaction volume in the forex market is so large, so shall be the fluctuations when it comes to that. So yes folks, hi, this is Rishabh Mishra and today we are going to talk about the reasons for the fall in rupee and how devaluation of a currency can impact an economy. In 2016, the USD to INR hit a record with 1 USD is equal to 68.77 rupees, the highest rate at that time. The global economic crisis following the coronavirus pandemic in March 2020 contributed to the further depreciation at 76.67 rupees a dollar. The currency exchange at the time of recording this video stands at around 77.4 rupees a dollar. The current weakness in the equity market is triggered by several factors, which includes foreign investors selling in the market, the imported or cost inflation, which is obviously caused due to the rising crude oil prices.
Reason is if you see elevated crude oil prices. For India, it really matters a lot because 70% of our imports are oil. And if we are sustaining around $120 per barrel on Brent, it is causing issues on the fiscal deficit and trade deficit numbers. So I think last day also we had the trade deficit numbers, which came in at record high of $24 billion. So internally also, domestically also, we had pressure apart from the global inflationary pressure. And on the FPI flows, since September 21 till date, we are seeing negative inflows. There has been no inflows at all. So it's all outflows. Talking about only this fiscal year, we have around $11 billion of outflows already, FY23. So flows are also not there. Inflationary pressure still remains. Thus, the pressure on rupee may be there for some more time. Though RBI have been trying to use its reserves effectively, which they had built during pandemic. But if globally rupee depreciation, or if globally dollar appreciation against majors are going to happen against G7 or G10, rupee cannot hide alone. So it has to align itself to the global peers.
The rupee has been witnessing constant shocks with the constant rise in crude oil prices, which makes the imports expensive. The rise in import prices causes the dependent industry to spend more on the raw materials, which finally leads to a rise in the prices of services and products that you and I purchase and consume. To this effect, the rupee has taken major hits and is sailing around its lifetime low, which was last 78.04 rupees. But folks, it's not only the disadvantages that come with rupee depreciation. There can be disadvantages and advantages in a longer term. In the past, many countries have purposely devalued their currency to get an economic boost, which includes China and also India. A previous example of currency devaluation for economic growth was in 1991. The government, along with the Reserve Bank of India, undertook a two-step devaluation of the rupee, which was first devalued against the major currencies by around 9% on 1st July 1991, followed by another devaluation of 11% 2 days later. This was done with the aim of making Indian exports more competitive.
An orderly depreciation is good. So if you say in 1 month, if you have 3 rupee move or a 2 rupee move, then I would say it is not an orderly depreciation. That's something which is too much of an excess volatility, which also spoils things. And even if we take a 25-year data of dollar rupee, the average CAGR depreciation of dollar rupee has been 4.3% on a CAGR basis. So that's is an orderly basis. So there can be some years there could be spike and some years it would have gone down. But if we are maintaining around this depreciation, I think that then it makes a lot of sense for an economy and its growth prospect, but not any sharp or sudden depreciation as such.
As part of its effort to boost export, the Indian government also renewed the trade policy in 1991. The new policy sought to bring a change in the licensing process. It also linked non-essential imports to exports to discourage such imports. The collective efforts of the government then fructified into India's economic growth. Similarly, between 1995 and 2005, China held the renminbi steady at about 8.2 per dollar, enabling its export juggernaut to gather the steam. After criticism over being called artificially suppressed undervalued currency in 2005, China responded to the growing chorus of complaints from US and other nations. It allowed the yuan to steadily appreciate over 8.2 renminbi to the dollar, to about 6 per dollar by 2013.
At this point in time, their focus is more on inflation, and the second focus is more on financial stability. So growth will definitely take a backseat at this point in time, because if we are not able to control inflation at this point in time, it can act hazardous, like you may have seen in various economies, where like Zimbabwe, if inflation is not under control, or Sri Lanka, if inflation is not under control, there is no value of money. So our central bank respectfully is moving in the right direction. Now coming to the government policies, yes, by adjusting expenditure, adjusting borrowings, or we can say by changing the taxation system at large, definitely the fiscal measures can work into play. But as you said about the PLI scheme, I think it has its pros and cons. So, like if you see the budget which happened in 2021, I think 1.97 lakh crore of funds were allocated towards the PLI scheme for I think around 13 sectors. But it has not functioned in all scales in the same manner. So some sectors have definitely benefited, but some may have not benefited. So as we said, an orderly depreciation helps.
So finally, let's understand from an expert perspective that what is actually true and how currency and economy are correlated.
There is more consumer spending in the economy. There is healthy liquidity in the market, both from the retail as well as corporate perspective. And if all of these fall in place, then we have attractive FII, FPI, and FDI inflows. So I would say, to sum it again, that a stronger economy is more important than a stronger currency, because if there is a stronger economy, we will obviously see a stronger currency. And lastly, I would say that it also depends on the perspective of the country, that what is their vision and how they want to go about.
Till the time, we leave you with some food for thought. Is it a stronger economy that produces a stronger currency, or a stronger currency that boosts the economy? Well, we leave you to think over it. Till the time, if you like the content, please like, subscribe and share.
If you like the video, do like, comment, share and subscribe.